Hello, Maverick traders. Welcome out to your market roundup, March 11th. Corey here with you. We're going to take a look at markets from a top-down approach. We're going to talk about meaningful movements, cryptocurrencies, for example, spiking dramatically higher. That's more a sign of the later innings of this rally, more a sign of exhaustion and that we're getting to the end phase in our view. We'll talk about sector rotation. We'll always highlight our very best ideas for trading opportunities.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So today, kind of an interesting day as you look at what was moving. Not much in equities. I mean, the Russell was down 0.8%, but everything else basically flat. Gold, oil, everything kind of flat. There were a couple of pieces of news, however. Biden talked about his $7.3 trillion budget, and it calls for tax hikes on the wealthy. Trump pledges tariffs if elected again. Tariffs were something that were quite popular amongst his voting contingent, kind of being strict against China and so forth. So you can debate the problems, you can debate the benefits, you can debate those sorts of things, but certainly politics are going to continue to be in the news. And cryptocurrencies up again sharply was another piece of news. Advanced decline line, about 40% of stocks advancing, most stocks declining today. The 50-period moving average still kind of teetering there on the bullish side, 63% up, 37% below their 50-period moving average. As we take a closer look at the S&P, I thought the end of last week was really probably an interesting dynamic where we saw a big bearish engulfing formation. We saw a bearish candle that engulfed and swallowed up the prior day's bullish body. This is the biggest bearish reversal we've seen in some time. Now, does it have real teeth here? Do we get a significant correction? That's what I started to call for last week, and obviously I was at least a week early in that call because we made a little higher high, right? But we're basically where we were to last week, and I think odds favor a good size give back in the S&P. The Nasdaq is actually down from where we were a week or so ago, and again, I think it's going to continue to lead us lower. And as I look underneath the surface at equities, there's a lot of things that are just not performing, and they tend to be more of the significant things. Like Nvidia had a big, ugly reversal at the end of last week. Apple continues to be in a downtrend overall. Meta got hit hard. Tesla's been in a sharp downtrend. And then the things that are perking up, like energy and so forth, they're just smaller sectors and not as significant. So from a broad equity perspective, it looks to me like maybe there's rotation and some things are turning more bullish. The problem is those don't move the needle. Those are not big enough weighting in the S&P to really drive the gains if things like Apple and Tesla and Nvidia and these names start to decline. So I've taken my outlook down. Again, I was probably a couple of days early to really getting more cautious and so forth, but that's good enough in terms of timing. If this thing's going to correct down, having adjusted a little bit more neutral, having adjusted a little bit to less bullish stance will make sense and will play out. Now, we still have some bulls, some bearish ideas. Let's jump into a few of them. First, on the bullish side, this chart of DraftKings, you're basically in a channel, and the way I'm thinking of trading this is in that channel formation. We have to make sure that the bottom end of the range holds, but if it does, first target is a push back up to the top end of the range and then quite possibly up and through that. I think this is an area of the market where they continue to be in a sweet spot in terms of opportunities in this economy and growth prospects going forward. If we look at silver, silver has reversed from bearish to bullish reversal. See that rounded shape to it. what comes next is probably a pullback, but it probably won't be much of a pullback. A couple of day give back as a buying opportunity and then the next spike. So I don't think I'm buying right here, right now, but any pullbacks in gold and silver look buyable to my eye. On the bearish side, I've highlighted Apple a couple of times on the bearish list the past couple of months. I'm going to highlight it again. We just have a little bearish bounce within a downward trend. I would anticipate this to roll over within the next couple of days and continue this downward slide into the 160s. Also, Nike, high quality brand, right? We think of Nike, we think of quality and signing Michael Jordan and all these bullish things, but the chart is not bullish. We've just made lower lows. We're bouncing, but it's likely to make a lower high and then continue to progress down into the low 90s. So Nike, Apple, big brands, but still we trust the charts more than we trust the name of the actual company itself. Markets are in this blow off top mode. Goldilocks is probably coming to an end. It's been this sweet spot where the economy's strong and inflation's been coming down and so on, but all the good things come to an end, and we're probably at that point. CPI comes out tomorrow, and that's likely to drive some volatility. Certainly, we know inflation numbers have been impactful for markets. I don't have a strong opinion one way or the other, but my inkling is that almost regardless, the Fed is not cutting rates anytime soon, and that's what matters most to markets. So the markets would probably cheer on a little bit of a give back, and if inflation were to drop down to 2.9 or even 3% from its 3.1, maybe that would be a minor positive, but ultimately, I'm not sure it moves the needle much. Adobe, Archer Daniels Midland, Dollar General, Lennar, Ulta, still some companies reporting. And let me say one more thing about CPI is I talked about how I don't know that it can move the needle towards pushing equities higher. Where I think CPI could really disappoint is on the downside. So I kind of look at it as even if it came out as good news, they realize the Fed's not cutting soon and it just doesn't move things. But what if inflation comes in hotter than expected? You could see equities down a couple of percent tomorrow morning. So where I don't think there's as much upside, I could be surprised. I've been surprised before, but I look at it as not a lot of upside and still a good bit of downside risk to that inflation number. That's the way I would look at that number, and we'll see. The market will ultimately show us tomorrow with a gap and show us how it's taking those numbers, and we'll see if it can move equities higher. I suspect not, but that's my opinion, and we'll see how that plays out. Thanks everyone for joining us tonight on the Market Roundup. Have a great week ahead. We'll see you next time.